Good morning, good afternoon, or good evening, depending on where you are in the world, and welcome to today's webcast, Leveraging Distribution and Compensation Technology to Support Profitable Growth. Brought to you by Insurance and Technology, MajescoMastek, and broadcasted by United Business Media. I'm Greg MacSweeney, Editorial Director of InformationWeek Financial Services. I'll be moderating the webcast today. I want to make sure this event is as interactive as possible, so I'd like to make a few announcements before we begin. There are elements of this webcast that will appear as pop-ups, and we want to make sure you can view them. At this time, I recommend you disable any pop-up blockers if you haven't done so already. It seems I've lost my connection, so if somebody could advance the slides for me, that would be great. This webcast also includes audience polling questions. When we're ready to ask a poll, you'll see the question appear in your slide presentation window. Please complete the polls when they appear by selecting your answer within the presentation window and then click the Submit Answer button. Thank you in advance for your participation. Speaking of participation, you can join our interactive Q&A session at the end of the event by submitting your questions at any time during the webcast. Just type your question into the Ask a Question text area below the media player window and then click the Submit button. The slides will also advance automatically throughout the event. If you like, you may download a copy of the slides by clicking on the Download Slide button located below the presentation window. And if you're experiencing any technical problems, please click on the Help link below the media player, and that will take you to our Tech Webcast Help Guide. You can also contact our live technical support helpline, and that number is also located within the guide as well. On the next slide, we'll introduce our next speakers. Today we have a great panel of speakers, and you'll hear from them right after our introduction. Our first speaker will be Mike Fitzgerald, who is a Senior Analyst in Celent's insurance practice. Mike has particular expertise in property casualty automation and operations management and insurance product development. His research focuses on underwriting and policy administration, business process and operations, and project and program management. Prior to joining Celent, Mike was Vice President of Enterprise Underwriting Solutions at Zurich North America. Before joining Zurich, he was a business architect at HCL Technologies America, and he held a number of positions at Royal and Sun Alliance, including a regional operations executive role. And following Mike, we'll hear from Erik, a Senior Vice President at MajescoMastek in the Life and Annuity Division. Erik has a track record of driving business creation and growth as a senior level executive in top-tier insurance carriers and technology solutions providers. Erik's domain expertise comes from over 20 years in the insurance industry, developing project management organizations, managing distribution channels, and driving financial analysis programs. Erik leads MajescoMastek's North American Life and Annuity Division, and he is responsible for growth strategies. Now, before we hear from them, I'll just talk about a few things we're seeing in the marketplace. So on the next slide, to begin with, many insurance companies have worked to gain loyal agents by competing solely on commission. And on the next slide, they offer offering generous incentives to agents is the idea, and with generous incentives, the agents will follow. This is still true and will probably always be true, but it can be costly, especially when other carriers are working to raise the bar when it comes to commissions. While generous commissions will probably never go away, some carriers have found that streamlining the payment process in an efficient and accurate way also helps to keep producers happy. Getting commissions completed in an accurate and timely manner is almost just as important as paying up for the commission in the first place. And one of the biggest benefits that carriers are finding of having an efficient and accurate compensation technology is more focused producers. Instead of having producers constantly checking the system for their commissions, they know that the commissions will arrive on time and will be accurate. Instead, they can spend more time focused on clients and driving new business. On the next slide, unfortunately, however, insurance companies are faced with the increased expectations of producers. Producers, like all of us, use the Internet for their own business and are using it on a daily basis for their own needs: online banking, shopping, travel, research, so on. And they see the capabilities of Amazon or eBay or E-Trade or Expedia or the eBank provider that they use. And they wonder why their insurance carrier can't, or their insurance partner can't offer similar capabilities. The increased expectations of insurance producers that carriers are now facing are similar to the increased functionality requirements faced by wealth management firms and asset management firms. So carriers aren't alone when it comes for the need to improve the technology that is needed to service frontline producers. But insurance carriers and financial services partners, providers as well, have older technology that may not be capable of providing the web-esque or the web experience that many users expect. These older technologies are becoming increasingly exposed as agents request additional functionalities, but carriers can't roll out these capabilities without long development cycles. However, once again, producers value many of the things that we value as consumers. Time is money, and people want efficiency. They want to be able to do things as easy as possible. This isn't earth-shattering news. Everybody knows that, and everybody knows that good service equals loyal customers or loyal producers. Agents would rather work with a company that makes it easy to do business. If it can take 5 minutes to look up account information with carrier A and 15 minutes to do it with carrier B, pretty easy to figure out which one they would rather do business with. Again, it's ease of use and increased expectations that are driving many producer-focused technology projects. This will continue to accelerate as producers continue to want to look for new technology that will help them grow their business and make their jobs easier, but with new technology. So without anything further from me, let me turn this over to Mike from Celent, and we go to the next slide. And for a quick reminder to everybody, you can ask questions at any time during the presentation, and just type your question into the Ask a Question area, and we'll try to get to it during our Q&A later today. Mike?
Great. Thank you, Greg. Hi, everybody. That's me. I can tell the picture of Harrison Ford that I sent in to replace this one didn't make it, but such as it is. Nice to speak with everybody today. I'm interested in this topic because it's one of the areas that I actually research in my assignment at Celent. If we could advance to the next slide. This actually area of insurance distribution has been a very active area for us this year, with companies contacting us in different states of looking at distribution. Some of them are reviewing what they have. Some of them are actually planning to do something in the short term. And a few of them are actually executing across multiple areas that affect distribution. So this is, as we say, a hot topic for us. Let's go to the next slide if we could. What I wanted to cover with you today has to do with industry issues that we're all facing in insurance. Then share with you some of our research around insurance distribution, and then finally make some comments about where we see distribution management processes going, where they are now and where we see them going in the future. Move on to the next. Just a note about my company. For those who may not be familiar with Celent, I want to let you know this is all we do, that is insurance and how technology is used in insurance for business value. So we do, and you'll hear me refer a number of times to research that we've done. We have 9 full-time equivalents spread across the globe committed to insurance research and how technology is used in insurance companies. To the next slide, let's talk about in this first section what the industry issues are, what's the state of the industry, and also how this affects distribution. Go on to the next. First, we'll start with P&C. P&C, for those of you in this market, you know the pain. Pricing remains very soft. In 2009, net written premium actually went down for the 3rd consecutive year, almost 4%. We did see a slight uptick in Q2 of this year of about 0.3%. That was mainly led by personal lines, and commercial lines still continued to shrink. Business plans that we're hearing about for next year call anywhere from flat to about plus 3% growth. I think the main takeaway for P&C, the P&C market, is if anyone is projecting positive growth, that pretty much means that they're going to take it from someone else. Prices are, especially in commercial lines, are likely to continue to go down. So this dynamic that we've seen in the early 2000s, mid-2000s about the rising tide lifting all ships in P&C is definitely over. Let's go to the next slide and look at life. In 2009, premiums decreased 5%, and this even takes out some of the large players like AIG and the Hartford in their results. So that's a pretty good indication of what the overall kind of, if you want to call the new normal state of the industry is. In June and July, application activity was still down, but what we're hearing and we're seeing reports of is basically recovering sales from 2009. Still not up to the area of 2007. There are some companies I want to mention that are doing very well and seeing very strong growth, and these are the exceptions, though, and they mainly have to do with some of the large mutuals, as we're seeing a little bit of a flight to quality take place in the industry. So let's go on to the next slide and let me bottom line this for you. This basically means that retention is going to be critical to sustaining any revenues. That dynamic I mentioned before about if you grow, you're probably stealing from somebody else. It means if you're staying flat, then that's your retention is you're doing a very good job of retention. What happens with the economy or insured exposures will really determine what's going to happen with growth in both P&C and life. And we're seeing projections of real GDP growth anywhere between 0.5% and 1% for the general economy. So that means that it's going to continue to be a very challenging growth environment. Organic growth, though, companies that show that that they can grow within or outside of the realm of mergers and acquisitions, and retention is going to be key to investor confidence. So for stock companies in particular, they're going to have to show that they can grow in this environment if they want to grow their stock valuations. Let's move on to the next slide, because this is not growth is not a new issue. Every year, Celent surveys insurance CIOs about what the business and IT priorities are going to be for the coming year. And here are the results from last year, and this is almost exactly at this time last year when we asked, what are the 3 most important business issues that IT will help to address in 2010? And you'll see the top 2 in P&C and life. Well, the top one in both P&C and life was growing the business, with 80% or so in both of those segments reporting that that's one of their top 3 initiatives. Ease of doing business for producers. So some of what Greg was saying, it was particularly strong in the life and health arena. And then cost reduction was identified as a top 3 priority in property and casualty. But note that those first top 2 issues are specific to distribution. How do we grow the business? And then how do we make it easiest for producers to do business with us? Move on to the next slide. What if we ask the agents, what are their concerns and what are their priorities? Now, this slide's a little confusing because what this asked agents, this was property and casualty agents, and what it asked is, what are your biggest challenges today? And it actually asked for people to assign a score where 1 was the highest. So what you're looking at are actually the biggest challenges, even though they have the lowest score. So organic growth, huge issue in P&C for agents. How am I going to grow my business? And the second one, there's client retention. So that supports very much what we saw in the insurance companies. There's a lot of alignment between the agent distribution force and the company insurance interest around distribution. Move to the next slide. This is from our own research in Celent when we went out to independent insurance agencies in property casualty, and we asked, how competitive is it in your agency in terms of when you make the decision of placing business with one carrier versus the next? And we knew that it was going to be competitive. We tried to really focus the question around how many carriers would it take to account for 75%, so 3/4 of your business. And you'll notice that there's very few of them said one carrier. So any piece of business that comes in is going to have some competition on it. And the majority of respondents, over a third, said that at least 3 carriers made up 75% of their business. What this means is that for any single submission that comes in, there's going to be competition, and then the question comes down to where is that producer going to place that business. And we feel, and what we've seen this year, is that how distribution management is handled is becoming a source of differentiation, so that when placement decisions are made, that is becoming a factor in where agents choose to place business. And so we'll talk about that at the very end, and I'll tie that back to you for you. So that's the industry. Now let's look at how distribution management is usually handled. In other words, when I think about this section, I think about how well positioned are most companies to respond to this opportunity of differentiation in distribution. Let's move to the next slide. A couple of comments, first of all, about distribution management and what we mean by that. When we talk at Celent about distribution management, and the way that most of our clients are viewing it now, is it deals with a number of processes. So the first one that often comes to mind is compensation. That's right there in the middle. To the left, you'll see licensing and appointment. That's often talked about, top of mind with distribution management. Performance management and metrics is an important area, but one that almost all of the companies we talk to say, gosh, we really wish we were doing a better job of that. Down in the lower left, another process or system or area that's involved in distribution management has really emerged over the last several years, and that has to do with the agent portal and self-service. It used to be with agent technology that insurance companies would almost have to be evangelical about the use and opportunities of technology in insurance. But what we're hearing and seeing now is actually that agents are wanting to do some of their self-service themselves. They want to update basic demographic information. They want to have some control in their use to that. As Greg mentioned before, the Amazon.com type of approach, and they're used to having that control, and they're willing to take that on. Compliance is becoming a larger issue. That's involved with distribution management. And the final area has to do with registration. And that deals with, okay, an agent may be licensed to sell a particular product in a state, but does the company actually want them to sell a particular product? Or are they registered with the company to sell a particular product? Have they done everything they need to do according to the company's standards to be able to sell a certain product? So this idea of registration in addition to licensing and appointment is becoming more and more of a focus for the companies that we talk to. Let's move to the next slide. And no analyst presentation is complete without some graphic that shows lots of arrows, so I wanted to include this one. This actually is a blinded example of the interfaces from a commission system to the systems in one of the clients that we've consulted with around distribution management. The issue here is just the number of arrows that are even in this simplified diagram. This company went through an exercise where they actually identified the number of interfaces that would have to be recreated, and they ended up with over 300 interface points between their commission systems and other systems which were used in distribution management, which basically means this adds to the risk and complexity of a system implementation. Let's move to the next slide. The other thing that we understand about distribution management and emphasize is that you have multiple internal and external actors, and that can also add to the challenge of revising these systems and revising this approach. So externally, you have the state and the regulators. Obviously, you have the insurance companies. Agents and brokers are obviously involved in that. But then within an agency or a broker, you also have individual producers who may have different needs than the agency or the broker. You have education providers that are looking for certain needs to be satisfied, and you also have the states with their licensing requirements. Go to the next slide. For the producer, what this means is that it can be very confusing for them to know who they are supposed to turn to. If they're involved in a distribution question, do they go to the branch administration with a contract question, or is that more appropriate to go to home office licensing? If they're trying to do sales planning, is that a field marketing rep for management information? Or maybe if they're having an onboarding problem, well, that's a different person, and it's in the HR area of the company. So for a producer, it can be an extremely difficult landscape to try and navigate. Next slide. Internally, it can be challenging as well because you have a good deal of fragmented data. If you remember that interface chart that I showed with all of the arrows, what that results in is you have a little bit of information in one system, another bit of information in another system, and internally it can be very difficult to bring all that together. You can have unmanaged hierarchies, difficult time in putting together the different hierarchies that are necessary to really manage the business. Lack of analytics. The main piece, though, is in that lower right-hand corner. If you look there, you see multiple handoffs. Many times, internally, you have to take an agent and hand them off from multiple areas in order to solve a problem. Internally, sometimes people know where that area is, sometimes they don't. So this is not only an external problem with agents, but internal to companies, it can be very confusing. And what that results in is higher costs and higher expense. So let's go to the next page, which is really a summary of what I've gone over and what the current state is in many carriers. I'm not going to work through each one of these bullet points, but I would like to point out two of them. In our work, when we work to figure out what the return on investment of an investment in distribution management would be, two areas really jump off the page in quantifying what the opportunity is. One of them is a hard benefit, and that's inaccurate commission payments. If an insurer is coming from a legacy environment, I can guarantee that they have inaccurate commission payments that are going on and that are being processed. From the agents, they're very nice because they tell you when they've been underpaid. It's really not in their best interest to always raise the flag if they've been overpaid. But one insurer that we worked with found that they could pay for a system in a matter of years only on the back of cleaning up the inaccuracies in commission payments. The second opportunity area is that next one, the inability to respond to plan design. This is more of a soft benefit, but this has to do with if a system will allow a commission plan to vary or commission plans to vary by geography and product, location, the coverage mix that is involved, if they can introduce incentive plans easily, bonus programs easily, run contests easily, there is the expectation, and it's a wise one, to expect overall revenues to increase. That's a bet on future revenue, but it is an area that in moving to and improving distribution systems can have a good amount of benefit, even though many times that's a soft benefit and an estimate at best. So let's move to the next slide. Let me show you what this looks like in terms of what we call producer lifecycle management. The goal is for the agent to look at and experience service from the insurance company as if it's treated as a whole. In other words, many times on the retail side, you'll hear customer relationship management, CRM. It doesn't matter where a customer comes into the process. Their problem can be handled once and done, very quick response times. That is the same goal that companies are beginning to form around what we call producer relationship management, where it doesn't matter where they come in this circle of processes. the person who's handling them would have access to the data that they would need to answer their question or to handle their problem, whether it's recruit, retain, appoint, register, whether it's an incentive question, and if they can't handle it, provide a smooth handoff to someone in the organization that can. So to the next slide, I just want to let everyone know we're now conducting our 2011 view of our CIO survey. And it's going to be very interesting to see where distribution initiatives rank in the priority. Kind of in conclusion, because the ability to grow is going to be so constrained by the general economy, we absolutely expect that distribution initiatives will continue to rank very high on the list, not only of business initiatives, but obviously flowing through also to IT initiatives. In fact, we're going to turn to you all. I'll pass it back to Greg for a poll question just to kind of take everyone's temperature on where distribution management is in your planning for the next year. Greg?
Great. Thank you, Mike. And we have a few questions that came in that I'll follow up with you on a bit.
Super.
So here's our first polling question for today, and it should be up on your screen now. Has your company considered leveraging technology in distribution management as a strategy for improving the top line? And you choose one. Yes, maybe, no, I don't know, or not applicable. While our audience is answering that question, Mike, a question did come in from one of our audience members. They asked, are there different levels of sophistication needed for the small independents or to the large captives? What are your thoughts on that?
There's a basic level of service which even the small captives are going to need and be expected to deliver. So, for example, in terms of self-service, we think that no matter what size it is going to be a very important category in, if you want to call it, the stickiness of keeping producers with you. So probably the answer to that, I would say the answer to that is no, but there are some basics which the small as well as the large carriers are going to be expected to be able to deliver to their agents, and self-service is an example of one of them.
Great. Let's see here. We have last chance for the audience to answer this question. So has your company considered leveraging technology in distribution management as a strategy for improving the top line? And let you get your answers in, and we're going to push the results out, and we can discuss these results later during our Q&A. So here we go. Has your company considered leveraging technology in the distribution management as a strategy for improving the top line? And 31% yes, and 25% in the I don't know area, and 31% not applicable. Interesting. We could certainly touch on that a little later. So let's hand this on to our next speaker, Erik, and you can take it away.
Sounds great. Thank you very much, Greg. And as Greg had mentioned earlier, I'm Senior Vice President with MajescoMastek. We're a technology provider of solutions to the insurance industry, both on the property casualty and the life insurance side. I do have, as Greg mentioned, 20 years background being inside of carriers like Hartford, Nationwide, Transamerican, seeing a lot of the business issues from the business side. And one of the things that we try to do is take a view to what are the business issues and what are the solutions that technology can help enable for a carrier, and really try to drive the business value out. And I think the topic that we're talking about here is really an extremely important one from the standpoint of, distribution really is the heart and soul of getting the product out to market and getting the consumers identified with your company. So it really is a strategic way to go at the marketplace and grow the business in terms of creating the ability to have producers have a positive impression of you through this kind of a technology and process is extremely important. So like we've seen from Mike's presentation as well, there's multiple stakeholders involved in this distribution value chain. And it's really imperative that these solutions for distribution management take into account the concerns of all of these stakeholders in order to drive value for an insurance carrier. So everyone from a distribution head to the individual broker and producer to the CIO inside of the carrier to the servicing agent, all of these stakeholders along the value chain have very different and very unique things that they need to get done in terms of their interaction with the company. And as we heard Mike talk about, a lot of the challenges that we've seen so far is inaccurate payments, creating a lot of rework and a lot of wasted time, multiple handoffs, creating multiple points of failure, and then inflexible commission systems not providing the ability to incent both the external producers as well as the internal sales desk in a way that align the interests of all of the interested parties. It really is a challenge for carriers to look at and something that is going to generate some strategic advantage for companies able to look at this from a holistic perspective. So over the last few years, carriers really have been dealing more with the financial difficulties of the marketplace and focusing on careful expense and risk management. And now we're starting to see carriers emerge from this challenging environment and returning more to the bread and butter of the business. And by this I mean attracting and retaining quality distribution for new and innovative insurance products. So the metrics really have not changed in this equation for driving profitable growth and generating high service to carriers. You need to attract distribution by being easy to do business with and providing quality service to producers in their interaction with the carrier. And chief among these challenges is making sure that it's easier for a producer to onboard, have the flexibility of a variety of different selling contracts and hierarchies, and then a clarity of understanding how they're getting paid. So as we move on to the next slide, what we're seeing in the carrier community is really the complexity is capable of dividing into some very distinct buckets. And what we've done with our process is we looked at these buckets and divided them more into some very unique solutions for carriers. What we look at from the first part is a producer lifecycle manager. And by this we mean handling all of the aspects of licensing and appointments and terminations. Then we move on to a compensation manager that covers various types of producer contracts and appointments, incentives, contests, and personalized presentation of commission schedules and payments. Third, we have a producer or performance manager to enable the home office and distribution managers the appropriate dashboards for measuring production and allocating resources to the most active and profitable producers in the value chain. And as Mike mentioned, this performance management aspect, the business intelligence of understanding where you're getting your best business, is highly important, not only for the producers to understand and manage their own business, but also for the home office to understand how to go after the best producers and retain them and make them more aligned with your company. And then finally, the producer portal, which really provides agents the ability to have transparency into their business and generates increasing levels of self-service for producers who are gaining comfort with the real-time access to information. Producers are becoming more and more internet savvy, and the self-service capability enables them to feel more in control of their business, but also creates significant profit enhancement opportunities for carriers looking to drive out efficiencies and productivity increases in their services operations. So, as we've already heard, the distribution world can be highly complex. And if we look at the next slide, not only are there a number of direct and captive agency relationships, there's increasingly a wide number of alternative distribution channels with a variety of contracts and assisted sale methodologies. One of the more complex relationships includes the internal support for distribution channels, which we call here monitoring relationships. Really, the interest is in making sure that there's a flexible system that can incent both the producers on the outside as well as the internal sales desk to provide high levels of service and benefit from making a company simple to do business with. The ability to handle these monitoring or support relationships is the key to managing the high level of service that producers expect and provide the appropriate aligned incentives for everybody along the sales value chain. But how do you handle a system that's this complex when you see, as Mike mentioned, all of these arrows pointing in different directions? Well, really a system that is rules-based provides the flexibility needed to make sense of all of these complexity and give carriers the ability to handle the changes and movement that is seen in the ever-changing distribution world. Rules can be written at a channel level that is specific to that individual channel. It can go down to an agency level for a particular way to deal with an agency. It can go down to a role level if you have particular types of roles within each of the agencies, and then all the way down to the individual producer level. And rules at each level down in the value chain dictates the rules and changes to higher up in the relationships. An individual producer can have multiple roles within a distribution chain, from manager to writing agent to servicing agent and beyond. And these roles can be spread across multiple agencies, taking an individual producer's traditional business, for example, if he's writing that through his own agency, and then he's writing variable product through a regional broker-dealer. That's highly complex, and you layer on top of that commission splits, contract credits, compliance, continuing ed, all of the circles that you saw in Mike's presentation. And again, really what you need to do is have the ability to look at that individual producer and their unique relationship that they have with a carrier, and making sure that they're able to be flexible enough, because producers today are no longer comfortable with being forced into strict buckets due to the inability of a system to handle their varied relationships. So rules structured at these multiple levels enable a carrier to break free from the limitations that they may have had in prior system constraints. So it's the mapping of these individual rules at the individual producer level that enable the required granularity to make a system configurable enough to handle the complex relationships, multiple contract interactions, and movement within the channels. These complex hierarchy movements have been highly tested in production environments throughout the world, where a number of agents can far exceed those in North America, and it creates an even more complex environment, particularly when you're talking about movements of books and movements of agents. So having rules and exception processing at the lowest level of the hierarchy minimizes the setup and generates the flexibility and the capability that a carrier needs. So let's take a look at an example of agency movement. If we could jump a few slides ahead. We're looking at a transition of an agent from moving from one manager to another manager and taking a book of business with him. Or if you have one producer who moves from being a producer to being a management trainee and leaves a book of business behind. All of these can create challenges in a non-rules-based environment built from a top hierarchy down. And this movement can be easily handled in a system where the rules for movement are built at the individual agent level. So the same flexibility can be used for termination of non-performing or dormant producers. The attributes and transactions affected in termination are largely similar to the transfer movement. Again, the rules built at a granular level enables a modern system to handle these changes in a seamless way and maintain the service levels to the remaining producers and consumers. So if we can move down to just below the termination slide. How does all of this create a process improvements and drive profitability for the carrier? That is the title of the presentation today, and I'm sure everybody's very interested in understanding how all of this can drive. And as we saw from the poll question, it looks like roughly 30% are looking at having this as a way to drive top-line growth, and a lot of people are wondering, really what applicability does this have? So when you're configuring a commission system, rules could be enabled to be set up in hours or less so that a new producer getting onboarded with a carrier has immediate availability to start producing new business. Typically what a producer does when they come to a carrier for the first time is because they've seen a product, they've seen a marketing campaign, they've seen something that has attracted them to the carrier. You want to take the ability to bring them on quickly and have them have a positive first experience so that impetus that brought them to the carrier continues on with a positive impression and they become a very valuable producer for you over time. It's a very important way to generate top line is have that first impression with your company to be a very positive and very quick one. As we mentioned, movements like transfers and terminations should also be fully automated to eliminate rework and downtime and create real-time changes for producers unwilling to wait for long lead times. As we all know, producers really want to have things at their fingertips, and they need the information in a real time or as close to real time as they possibly can. So it provides them with an immediate feedback for success and generates more options for payment frequency. So you really are looking at a system that is enabling you, because of the rules at an individual level, to have more flexibility, more real-time capabilities for a producer, and generate that kind of positive experience. Next slide. As Mike mentioned, one of the things that is really an outcome of these kinds of systems and the flexibility that they have is reporting. And reporting can't be overlooked for generating more effective distribution strategies. Automated performance measurement on a predefined indicators provide actionable dashboards for managers and producers alike. A robust data warehouse enables customized and ad hoc reporting for special analysis and contest effectiveness studies. And as I mentioned before, the self-service will become increasingly important to Internet-savvy producers and generate cost savings for carriers as producers move more and more to doing the transactions on their own through the portals. So it cannot be understated the importance of having a very flexible business intelligence capability combined with the transactions of onboarding and paying commissions. So next slide. So we at MajescoMastek provide a distribution management solution based on these concepts that we discussed today. And we have a unique blend of long-standing focus on the insurance industry, a high level of technical expertise focused through our R&D labs, and a strong blend of domain expertise provided by resources who've lived inside of carriers and understand the day-to-day challenges of our carrier clients. So it's this unique blend that's enabled our firm to provide successful client solutions around the globe, and we're looking forward to providing more solutions to the industry based on this domain expertise and the technology that we have. So, Greg, back to you for questions.
Great. Thank you, Eric. I apologize to the audience for some of the technical problems we had, but we're going to go right into our Q&A session now. So before we begin today's Q&A session, if you could, please fill out the feedback form that has opened up, or should be opening up in front of you. To complete the form, please press the Submit Answer button and at the bottom of the page. Thank you in advance for filling out the form. Your participation in this survey certainly helps us in our future events. And now on to the question and answer portion of the webcast. As a reminder, you can submit your question at any time during our Q&A, and just type it into the question, into the text box located below the media player, and then click the Submit Question button, and we'll try to get to as many of these questions as we can during the next 15 minutes or so. So let's go to the first question that came in from our audience. And I guess I'll direct this to you first, Eric. Several references were made to inaccurate commission payments during the presentations today. What percentage of commissions are typically overpaid, and how does your system address this?
Well, it's really, when you're talking about inaccuracy, it goes on both sides of the equation, overpaid and underpaid. And I think as Mike mentioned, the overpayments are the ones that producers aren't going to raise a huge problem about. But challenges to underpayments and how a commission is calculated is largely what the commission department is going to deal with, and the ability to deal with disputes and be very transparent around disputes is an important part of the system. I think one of the answers to how does this happen, particularly when you're talking about a producer portal and the ability to push a commission statement out to a producer portal, one of the things that you can do, as opposed to kind of a static piece of paper that may have just one number on it, you can actually show the calculation of the whole commission statement. So you can show the individual policy levels, you can show the contracts that it was under. If somebody wants to drill down into a contract and understand what is the contract that back behind that policy, you could do that. and then understand how the calculation actually evolves out to the end commission payment. So I think that's one of the things that the ability of putting those commission payments at a very granular level enables you, and the ability to push that out and have an agent work on that themselves is highly important. I think one of the things also by having this in a separate system, as Mike mentioned, a lot of the legacy systems, as the insurance products got more complex, as the contracts got more complex, as the hierarchies got more complex, the legacy systems were a bit challenged to be able to handle all of these things. And so there's a lot of what I'll say is noise maybe in those kinds of systems. And to try to rework and fix that in a legacy technology is also creates a bit of challenge and doesn't necessarily drive the value you would want. But by moving that out into a separate producer system, so you have distribution management and commission processing, you're able to take that data out, do the quality assurance on the data, make sure that you understand how that commission is getting calculated and paid in that separate system, and it becomes much more visible than how it was done in the legacy technology.
Great, thanks. Mike, while we're on the topic of inaccurate commission payments, anything that you're seeing you want to comment on in the marketplace in terms of percentages or anything like that?
Boy, Greg, I wish I did have a number, and I've looked for it. It's just very, very difficult. It's one of those dirty laundry type subjects that you can understand the sensitivity around somebody talking about that, or even participating in, in surveys and that kind of thing where the question's asked. So, I haven't been able to find an actual number. What I have discovered in conversations around this is that all companies who have examined this, who are on a legacy platform, find errors. And in the discussions that I've had, the errors are always larger than they thought they would be. The other thing that was very interesting was that the places where they looked for overpayments was actually the same areas that were reported as underpayments. And what that means is that, as Erik was saying, when legacy systems are made to jump through hoops that they're not used to, weren't really designed to jump through, sometimes those errors can be overpayments or underpayments, but in the same general area. So one company started their review. They actually brought in their internal auditors. They didn't want to, sub this out. They didn't want to have a lot of visibility to this, but they just asked their internal auditors to go in and look. And the place where they started, because they have pretty good data on this, was where agents were reporting they were underpaid. And sure enough, they found a fairly large correlation, and so errors were happening in terms of both underpayments and overpayments in the same general area. So if someone's thinking about doing that, or at least taking an initial snapshot to see if there's any opportunity, go ahead and look in those same areas where your agents are saying, hey, you're underpaying me, and look for overpayments as well.
Interesting. That's pretty interesting. Next question, and I'll direct this to Erik to start. Multiple channels are diverse in their operations and need to be managed differently while the distribution landscape keeps on changing. How will investments that carriers make today be relevant as things change as we go down the road?
Sure, definitely. And I think it's very important to have the kind of systems that provide the level of flexibility in the rules and configurability in the rules. And as I mentioned, building that down at the end producer level, because I agree, one of the things that I started out in the insurance world with was getting the wirehouse community up and running on insurance sales. And as challenging as that was, and as little as people thought stockbrokers would end up selling insurance, it really became a major distribution channel for the company. And the ability to have a system that could handle an entirely new distribution channel as you move into banks, you move into direct, you have some hybrids between direct and agent assisted. You're really going to need to have something that is configurable, rules-based, and has the ability to go to that individual producer level, because one agent may be a career agent on a certain types of products. You move over and they're doing assisted sale for a different type of product and channel. So that's what I'd say is that, the way that the systems are architected today with the rules and the granularity of where you apply the rules, it really is what will be flexible to go after channels that we probably don't even know about yet as social media comes online and the consumer becomes much more internet savvy about how they want to go about buying insurance.
Great. Mike, this question is for you.
Hey, Greg, just before we move on to the next one, just to comment on that one for people to remember, if they're dealing with multi-channel management, look at the security that's involved in the system, particularly around reporting. You want to make sure that even if a particular entity spans different channels, that they what they can and can't see, what they are allowed to see and not allowed to see, based on the fact that what channel reporting is going on. You really don't want people to see, even if they are appointed, licensed, registered in one channel. You want to make sure that you've got the proper data security, and particularly not around necessarily entering or changing things, but even just around reporting and viewing. So for those of you in multiple channel environments who are looking at new solutions, you want to make sure that you include that evaluation point as well.
Good point. Good point. One question here for you, Mike. What would be a good strategy when it comes to making an investment in a distribution management system? Obviously, a lot of moving parts with this and a lot of different organizational parts to keep in mind here. Should carriers take one piece at a time or make the complete transformation all at once?
We've seen success at having a whole program that's recognized in the business for transition around distribution management, but doing it at a measured pace. So rather than the big bang, I'd say take it component by component, but you need to do that in the context of what you would like the future environment to look like. So many times when you talk about distribution, people only think about the commission system, but that's not necessarily the needed place to start. You can make that onboarding ability and the speed to market that Erik was talking about, and you can improve that and you get some significant business advantages. So, I think what you have to do is approach this problem realizing that from the producer standpoint, that circle that I ended my presentation with is the way that they view the world. Make sure you're working towards that, but you don't necessarily need to go at it from the big bang standpoint.
Gotcha. So have the map and know where you're headed, but just take it off in smaller pieces as you go along.
Correct.
Right, and I would just echo that. I think as Mike showed, the interface chart with a lot of different interfaces that exist in the current environment. I think a measured approach where you're going step by step, it helps not only the internal home office staff, but also producers get comfortable with the new way of seeing their business. But I think also what I would recommend is that you do want to look at vendors that have an end-to-end solution that will minimize adding to that interface problem, so that you really are looking at a consistent platform that you can operate a producer's life cycle over and try to minimize that interface challenge as it was shown.
I guess, Erik, I'd take this question first, and then maybe Mike, you can answer after Erik. How are carriers managing to keep up with the regulatory changes in distribution, and does technology have an answer to that, or for that, I would say?
Mike, do you want to start off on that?
Yeah, carriers are doing the best that they can. We've seen examples where, particularly for education and also for the interfaces with the producer database that Nipper provides, that actually the solutions are getting making that whole job much easier. Some of the more advanced solutions actually provide a regular update with the Nipper database. For example, you can also get interfaces into DTCC. You can also get interfaces into FINRA in order to keep up for that. So I think, as you see in a variety of other areas, technology is actually making the compliance world easier. What that does necessitate, though, is a very different approach to managing that whole regulatory area. It doesn't mean that it's different bad. It just means that some of the licensing and registration and continuing education responsibilities are pretty closely held in insurance companies. They've been done for years by very competent people who know how to do it in their current environment. What you see with the advent of modern systems and also with the ability to exchange information with these outside regulatory bodies is an opportunity to really change that whole approach. But then you're into some significant change management issues where you're really talking about, to get the benefit, you do need to automate processes that previously were manual, and you need to move from an environment where people are pushing around paper to where they're more either managing vendor relationships or they're managing the process and managing exceptions rather than touching everything that goes through. So I think there's great opportunity. I know of some real success stories where people have been able to cut the time and expense on dealing with compliance issues related to producer registration, producer licensing, ongoing continuing education. But I will tell you and raise the flag that does require some real change management issues that have to be carefully managed by not only the project managers involved, but also particularly by the executives and steering committees who are sponsoring projects like this.
Yeah, and I think Mike brings up a great point there, because I think that really goes for most of the solutions that we're seeing out in the marketplace, not only on distribution management, but in other functional areas as well, is that the technology is at a place now where it can create a lot of efficiencies in terms of the interfaces with some outside databases, as Mike mentioned, as well as workflows and rules and the ability to program in your compliance triggers. So if there's something that you want to flag and have somebody look at, you're able to put that into your workflow rules. The challenge is that if you buy the technology and you drop it into your old process, that you're really not going to see the level of benefit driven for the business than if you take the approach, as Mike was mentioning, that you combine the new technology with a significant amount of business process change management and really look at what is it that you could do differently in terms of interacting not only with the producers but also with the system, so that the way of doing your day-to-day business will change along with the technology, so that you're really able to unlock the overall business value that the technology enables.
Okay, great. One more question here, and then we'll maybe some wrapping comments if we have time. Mike, you said in your presentation earlier that many distribution management systems are lacking in analytics. What type of analytics would be most useful to distributors, and how can carriers really start to provide some of that information?
A lot of this has to do with basic information like cross-sell opportunities that because data in legacy environments are held in different places, it can be difficult to really provide a picture. Remember, an agent looks at their business like an account, whereas insurers traditionally have looked at it product by product. And so the application of data management has to do with really being able to report in both of those approaches. So cross-selling is definitely an important item. Being able to real-time report what business has been sold, what business has been booked, what business commissions have been paid, all of those real-time services in an environment where an agent can get to that information from an internet connection. So a lot of this is very basic blocking and tackling, but you just can't get there from a legacy environment. You really do have to have a more modern system with a relational database in the back, and as Kevin had mentioned, rules-based drivers helping you to get there.
Okay, great. We are actually out of time today. We're running up against the hour, so I'm going to wrap up right now. For more information about today's webcast, please visit any of the resource links that are open before you. Within the next 24 hours, you'll receive a personalized follow-up email with details and a link to today's presentation that will be available on demand. And you can visit it on demand by visiting www.netseminar.com. Thank you for attending today's webcast, Leveraging Distribution and Compensation Technology to Support Profitable Growth, brought to you by Insurance and Technology and MajescoMastek. On behalf of our guests, Mike Fitzgerald and Erik Stockwell, thank you for your time and have a great day. This webcast is copyright 2010 by United Business Media, LLC. The presentation materials are owned by or copyrighted, if that is the case, by Insurance and Technology and MajescoMastek, which are solely responsible for their content, and individual speakers are solely responsible for their content and their opinions. Thank you.